So I'm going to start by introducing myself. So I'm Tariq Mansour. I'm the CEO and co-founder of Kalshi. Kalshi is a startup. Could we actually please close the door or something along those lines? Thank you. So what we're doing at Kalshi is something a little unconventional. It has nothing to do with the Arab world, but we're building a betting platform where people can sort of bet on whatever they want. We're trying to sort of shift the betting industry to less of a vice industry and adding safety and mechanisms to combat addiction. I'm not going to talk too much about it because it's not related to the panel, but that's who I am. So what we're talking about in this panel is digital infrastructure and some of the technologies that have developed in recent years around it. We want to see and discuss how it can be used to shape economies, how we can use it going forward, and we want to contextualize it with respect to the Arab world. We have three amazing speakers with us. We have Yazan from Jibrel Network. We have Mashael from the QCRI, and we have Moe from ShopGo. I'll let the speakers to start and introduce themselves. So Yazan, maybe you can start with it.
Thanks for the intro. My name is Yazan. I'm a chemical engineer by background, but then made a career in finance. After that, I started the Jibrel Network, which puts traditional financial assets, currencies, commodities, equities, into token format, like Bitcoin, which just means that we track traditional assets using distributed ledgers instead of centralized ledgers.
Hello, everyone. My name is Mashael Alsabah, and I'm a scientist, cybersecurity scientist from Qatar Computing Research Institute. I did research on privacy-enhancing technologies, specifically anonymous communication. And then after that, after I finished my PhD, I worked at QCRI, and now I do general network security research, including privacy in Bitcoin and cryptocurrency, blockchain, and detection of malicious domains, and so on.
Hi, I'm Moe. I started a company in Jordan and Dubai called ShopGo. And 2 years ago, I moved to London to spend more time learning about cryptocurrency and blockchain. And now I'm working on a solution for grocery shops to compete with Tesco, Amazon, and so on. And the way I look at it, that each grocery shop in London or in Europe, at least they have an ATM. They have plenty of different products. That's where I see the currency and the product combination work.
Great. So, all three of you have worked and are still working with blockchain. So I wanted to ask you guys, what is the sort of first interaction you had with blockchain, and how did you decide that you wanted to jump in, change your career tracks, and sort of do that? What was was there any sort of defining moment where you thought to yourself, I need to get in on this?
When I was at Oliver Wyman, a consultancy, there was a partner who was obsessed with Bitcoin, and he would send a weekly blog post about Bitcoin. And I disregarded it almost completely the first time I saw it. But then when you dive into the mechanics of Bitcoin and more broadly blockchain, and you see the mathematics behind it and the logic behind it, I don't know how much of it is hype because it's not that useful, but it is cute. It's beautiful. It's not just cute, it's beautiful. It's a great way to go about something. And over the last few years, we've had substantial innovation, because you have to remember, the first iteration of a blockchain, as we know it, was 10 years ago with Bitcoin. So in the last decade, we've seen a ton of evolution. And now we're actually seeing how this technology can be useful. So that was my intro to it. And if anyone reads about the math behind Bitcoin, I think it's hard for them to not jump in.
So I started in 2015. I was a visiting scientist here at MIT, and I was looking at the anonymity of anonymous communication networks, and I was working at Tor, and I was looking at the dark web, basically. And I noticed that a lot of these pages use Bitcoin because at that time, a lot of people believe that it gives you anonymity, those transactions in Bitcoin. So I was wondering if it's possible to de-anonymize users through the Bitcoin because the blockchain is out there and you can analyze those transactions. And indeed, we started the work by collecting many Bitcoin addresses by crawling these onion pages or the dark web pages, and we're able to crawl social media pages and link through the blockchain users to sometimes very sensitive transactions.
So in my previous company, we enabled hundreds of merchants across the Middle East to sell online. I reached a conclusion that e-commerce and digital economy doesn't exist in the Middle East. It might, Souk and Kareem are an exception, but it's not working because of cash. Then when I decided to start a new company, I wanted to solve the cash problem, and my co-founder told me that check Bitcoin. That was early 2017. I did check it, and then I decided to stop, not to do any further development and educate myself more on the subject. And since then, I've been spending more time and on the privacy aspect as well. I think that's fascinating.
Great. So I know you guys introduced yourselves, but can you talk a little more in depth about the work you do and how it's related to blockchain? Important, and sort of what sector of blockchain more specifically you're innovating in?
So as I mentioned earlier, we generally put traditional financial assets, currencies, commodities, equities into token format. And that has a lot of benefits. Transferability, finality, settlement and clearance. So for example, a cryptocurrency exchange called Ether Delta, run by one guy in Brooklyn, and less than 10,000 lines of code, moved more trade volume than the alternative investment markets in London. So one guy is moving more volume than an organization that's been around for 20 years and has hundreds of staff. So we instantly know that this is a better way to trade value online. And that's kind of what we're doing with it. Most of our experience is in the Middle East, and over the last few decades, conventional finance has evolved tremendously, whereas Islamic finance has kind of lagged behind. And digital assets, especially tokenized commodities, can really revolutionize Islamic finance. Right now, to facilitate a mutajara or murabaha loan, you rely on external financiers, a commodities exchange. In many cases, they go to the London Metals Exchange for base metals, which is kind of weird for us to be relying in the Middle East on infrastructure in Europe to facilitate transactions, Islamic finance transactions that are specific to the Middle East, or at least the Islamic world. So that's kind of what Jibrel is doing about it. We're trying to disrupt Islamic finance with this new toolkit, because that's what blockchain is. It's a new type of database. And we're trying to see, okay, how can we use this to solve some of the problems that we suffer from that may not necessarily be problems in the Western world?
Yeah, no, that sounds great. So a little more to that point. So can you talk a little more about why blockchain? Why did you, for example, not decide to be the equivalent of whatever they were doing in Europe in the Middle East or in the Arab world? Why blockchain specifically? What about blockchain made it so that these transactions are a lot easier? I mean, there's definitely the part of it's trustless and all that, but can you talk a little bit more about that?
It's two-pronged, because if you look at the technology in its raw format today, a lot of people go, why don't you just use an append-only database, or why don't you use... There are numerous other technologies that may even be better suited in some cases. The reason blockchain has had such success is that hype element, which was completely disconnected from reality, but it allowed a lot of people to look at this. And I could have tried going to key stakeholders in the Middle East 5 years ago and be like, yeah, we'll build this amazing solution and people will be able to underwrite Islamic loans with the same speed as conventional finance. But no one would have gone for it. And with blockchain, you had a bit of a silver bullet in which people were really interested, and then you could start the conversation. So funnily enough, it wasn't technologically driven as much as it was hype driven.
This is actually a very interesting point. I think we're going to go back to the point of hype at some point in this talk. But it's really interesting that it wasn't actually fundamentally the technology. It was just the perception of the technology that was the main driver of your decisions here. which is
To a large extent, the technology is still very useful. The database is cryptographically enforced, it's immutable, and in a region plagued with trust, you can imagine how useful that would be. So with regards to the usefulness of the technology itself, it's called trustless transactions, and trust in the Western world is done through intermediaries, and intermediaries are middlemen, and middlemen is infrastructure and people. So when looking to implement solutions in the Middle East, this gives us an opportunity to leapfrog that middle step. Just like telco operators in Africa went from 2G to 4G and they skipped the entire 3G element, the same thing can be done for finance, in particular in the Middle East.
I think that makes a lot of sense. Mashael?
So part of our work, research work, is now that we showed that it's kind of the blockchain or Bitcoin is leaky. We're looking at like e-crime happening on the blockchain, because unfortunately with this kind of technology you're also attracting black markets, so and e-crime. So we're looking at, for example, Ponzi schemes. So these are fraud schemes where you attract investors and then you build a pyramid. Every time you promise them fast returns, and you rely on the newer investors, their cash, in order to reward the earlier investors. And then at some point when you stop receiving money, then everything collapses and people lose money. Currently the Bitcoin cryptocurrency is a place where we've observed that there's a lot of these Ponzi schemes taking place, especially in regions like in Africa, for example. We're also looking at ransomware, for example, because this is the only they very heavily use the Bitcoin blockchain to receive their profits and their money. So and they do receive money. We also we analyze and we look at the economy of the dark web and the dark markets through the blockchain. So it's mainly analytics for security and e-crime prevention.
That sounds great.
So in my case, since I wanted to solve cash payments in the region, if you want to look at it, USD was enforced by the US government to be the standard government of the world. And if you look at the change that's happening around the world, somehow there will be another currency that the world has to agree on, and it has to be transparent, because otherwise it has to be enforced by army or something else. And that's where the brilliance of any digital currency, if it proves that it's been sustained for so long, the world will emerge into this new currency in order to continue to trade. I think it's a matter of time, but for me, that's where I was. I don't have any hope that any country in the region will solve the payment issues. I think if it was to be solved, it would have been solved by now. That's why a new currency will solve it, because it's outside all this control and block.
Can you talk a little more about the blockers, the main blockers you see between sort of this currency becoming widespread?
The blockers between?
So you said it's a matter of time.
Yeah.
Why is it taking so long? Why are people not, already sort of trusting these currencies, using them, and sort of shifting out of USD?
I think it's only a matter of trust. With time, people need to trust the new form more. Okay, think about it this way. There's no one advocating the currency as much as the US government is enforcing the USD. So basically, it's a currency that is created out of nowhere. A pseudonymous character created it. There's a lot of missing elements into it. That's why it needs time until I give you a form of money that will remain with you for so long, and other money collapse. That's where I think there's a need for other money to collapse in order for any digital currency to emerge.
Because most of the governments in the Middle East are banning trading, and some of them are making it illegal even to trade in Bitcoin, for example, or other. For some countries, it's okay to own Bitcoin, but trading is very hard. It's made very hard, so it's really hard for people to trust, especially with the changes in the prices, the sudden changes, sudden drops, and so on. So it makes it also hard for people to trust, right? Which adds to your challenges. Oh, okay, great.
I think our governments are clueless, so that's the only time we can do something without their permission.
But there's another thing that they also like to control and they want to monitor. And with cryptocurrencies, for example, it makes it really hard for them to control and to watch who's paying who and so on. So that's another challenge too facing you.
Yep, I think the challenges can be divided into three buckets. So economical, technical, and social. So from an economical, let's start with technical. I think everyone is familiar with the technical limitations of blockchains. They're slow, they don't scale well, they're pseudo-anonymous, so they're not completely private. So from a technical perspective, there are heavy limitations. And then from an economic perspective, Bitcoin is finite. There are 21 million Bitcoins and they'll eventually all get mined. So anything that's finite with growing demand tends to be deflationary. So Bitcoin will be worth more tomorrow, demand constant, than it is today as we scale. It's very hard for me to pay in a currency that appreciates. If given the option to pay in Bitcoin or pay in dollars, I'm always going to choose to pay in dollars because the dollar will be worth less tomorrow than it is today, whereas the Bitcoin will be worth more. So that's the second issue, which I classify as economical. And then final, there's the social element. Today, how many people here own cryptocurrency? So a few. And how many own equities, stocks? Okay, how many times have you sent someone Facebook stock? You don't. And today, that's the social element. A lot of people view cryptocurrencies as investments. I don't send my investments, I hoard them. So that's another limitation to widespread adoption as a currency. Yeah. Social.
I have a different point of view. I think, and that's where I think we should look at it differently as Arabs. Our problems are very different from the world's problems. For example, for me, it's funny, the problem that UK is going through with the Brexit. People are so worried, and then when I look at it, you should visit Syria. Maybe you would know what a problem is. So if you go to the UK, to Europe, to US, Japan, they have very good currency that is working really well, and you can transact almost immediately. So you could use, for example, TransferWise to send $100 from the UK to the US, and you would only pay $5. It's impossible to do it in the Middle East. There's no way you can do it. So if we're following the world will take time because they already have a very good system, and they don't have an issue. If you look to an average American, they're transacting really well. Contactless in the UK is the default, for example, and I think that's why it's not emerging in advanced societies. But when I look at it from our point of view, I really don't understand why. Because when we have a war, for example, in Syria, Lebanon, Iraq, you can't get your wealth out of the country because of everything you might go through. So if you lose 25%, it's fine, because the other option is to lose everything. But that's my worry, that we're looking at what the world is doing, and then we're following them. But for us, it's a brilliant solution.
Yeah, that makes a lot of sense. It's a very interesting perspective. So I wanted to sort of like go off of Mashael's point about your work around crime and all these sort of bad actors that use blockchain and cryptocurrencies. And I think this is part of why sort of governments and regulators tend to shy away and dislike cryptocurrencies. I mean, there's that and the fact that it also gives them less control. I was wondering, especially that both of you also are in fintech, if you had any sort of issues with regulations or how you sort of circumvent the regulatory landscape around these things.
We don't circumvent any regulation. Let me be clear about that. But it's been really difficult. So we're domiciled in Switzerland because that had the most favorable crypto regulation at the time. It took us a really long time to complete our first audit just because no institute believed that we would have audit-worthy books. And then in the Middle East, it's been quite slow. The UAE has been quite progressive. They've released frameworks. So has Bahrain. Saudi is expected to follow. So regulation has been a common theme over the last decade, and people have been saying regulation is coming for quite some time. But I think right now, regulation actually is coming. And you have a lot of leading countries who have frameworks for digital assets and currencies.
I'm not operating in the region at the moment, so I don't have a comment.
That sounds good. Yeah, Mashael.
So yeah, regulations are slow, but they're coming. We were having talks with our stakeholders. For example, I'm from Qatar, so it's Qatar Central Bank, and they are working on their regulations. However, they also announced the IDNAR, which is a digital e-token so for fast payments, and it's based on the blockchain as well, and it's backed by gold. So that kind of maybe solves the problem of the fluctuations in price, and maybe can give people more trust in such systems.
That makes a lot of sense. So yeah, so I think legal, how I view it is like, to some extent, it could be a con to go into sort of the crypto or blockchain space. It could be something that sort of is a blocker against going into it. I was wondering if you can talk a little more about like other cons that you see in the field. I mean, people always talk about like the pros, right? Like there's trustless, there's decentralized, there's no single point of failure, and a bunch of things that, you know, we always see in the media and news and all over the place. Can you talk a little more about like what are the issues and what are things that you should think about before getting into the field, before going to blockchain or making that choice that, like, let's say I want to build something on top of blockchain or just build it on top of like a regular traditional database, for example?
Yeah, so the technical cons are quite clear. You know, they don't scale well in their current format. They're not very private. And these elements translate significantly into operational drawbacks. So for example, in terms of scaling Bitcoin even to a world currency, it can't do that in its current format. Visa processes, I think, 22,500 transactions per second. Bitcoin does 12 to 15. And that's already after an upgrade when it was 5 to 7. So there are technological limitations. And then on privacy, no one wants their net worth broadcast publicly. And that's only when you're maintaining a simple ledger of balances. If we're trying to trade stocks, for example, all trades are public. That's a nightmare. Now you can front load someone else's trade. Someone buys 1 million shares of Apple, you buy 1 million and you put a higher transaction fee, you get yours committed before his, and you benefit from his trade. So in their current format, there are endless limitations. The positives are, thanks to the hype, there are a lot of smart people who are empowered and have the capital to solve these problems.
So when blockchain first came out, it was through, I think, through the Bitcoin. So first of all, someone wanted to have the digital currency, and so you need to record transactions. So he introduced this chain of blocks through the hashing. The mathematics is fascinating. I agree with you. He needs to prevent people from just broadcasting, and he wanted to limit. So that's why he needed a consensus protocol, and that's why we have the proof of work or the other alternatives, the proof of stake or bandwidth or whatever people proposed in the literature. So the blockchain for Bitcoin worked. Because it was designed to answer requirements, a set of requirements. It works. It has some limitations. People say it's zero trust, but that's not true, because you still trust the developers. You trust the protocol. You trust the hash function used. You have a lot of trust in the system. You trust even the implementation, which in a lot of secure systems we know that this is not 100% correct. Many bugs happen due to just like the Heartbleed, for example. There's the denial of service attacks. You can be like, I think a lot of attacks are understudied for the blockchain. That's why what the industry, I think, is going towards is the private blockchains. I think they call them the permissionless blockchains, and I'm not sure if in that case they have some transparency, but they lose a lot of the transparency. Users lose the transparency. So for these, also there's a need for enhancements to make them more secure and more transparent for users, and instead of just using them to trying to use. So what's happening right now is that because of this hype, a lot of the people think that they can just use a blockchain, throw it at any problem, and solve it, and that's not true. The situations where it's successful is when there's a need. So for example, the Bitcoin. For example, another semi-blockchain is the Google Certificate Transparency where you have all certificates of domains maintained by Google in a data structure similar to the blockchain, except it's smarter. So here you have a big company maintaining a chain for users to enhance the security, and its design is different from the traditional linear blockchain of Bitcoin. And here it's successful and it's been maintained and it's being used, and Chrome uses it behind the scenes. But taking it and throwing it at any problem is something that is what I think we should be careful with.
I don't see any cons for us as Arabs. If we look at money, digital currency rather than smart contracts and blockchain, I think the only con that I can see is being late to the game, because we don't transact anyway. So we need to try something out in order to transact. Let me just explain a few things. If you are selling a recurring service in the Middle East, it doesn't work. You cannot sell recurring transaction. So basically, all the hype you're seeing as SaaS in the world, it doesn't work in the Middle East because we don't have any payment. So if you can explore, it's quite difficult to do a recurring payment on the blockchain, but if you can explore a way to mitigate the risk or to come up with a solution, that's something else. Again, it's going back to the idea that our problems are different to the world's problems. And if we're going to look at blockchain and cryptocurrency from the world's eye, we're missing the opportunity. Because the way I look at it, we never, as Arabs, we never got the opportunity to look at the technology at the early age of the technology. We knew about most technologies when they went IPO. So now we have the opportunity to participate early on. It has flows. If there are investors here, any startup has flows. If we're thinking of startups in seed, Series A, Series B, they're going through many challenges. So for us, if we think about money, I think we should run to it without even thinking as people.
Because we don't even have banking APIs in the region. It's banking APIs, you know, they're so important and so critical. The velocity of capital almost dictates benefit, right? So the greater velocity of capital and the better the allocation of it, the more prosperity. And we don't even have banking APIs. It is so difficult to move money in the MENA region. So you can imagine if, as I was saying, if the movement of money is correlated to prosperity, then we're heavily hampered technologically.
Yeah. In one of the capitals in the Arab world that is very technically enabled, if you want to do an account statement, you have to go to the branch that you opened the account with in order to get the statement. So that's where I think about the difficulty in terms of money.
Are there any other things in terms of digital infrastructure in the area that you think need to happen for us to sort of get to that stage where we can like fully explore the potential of like these new technologies such as Bitcoin and blockchain?
A great one is probably property registries. You know, blockchains are public ledgers. What other public ledgers do we have? Okay, property. So it's a great application, and I remember a story happening in Jordan where a family friend went and bought a piece of land, and he found out he bought the one exactly next to it that is in way worse condition. This shouldn't happen. This shouldn't happen. And this is that trust element we're talking about, right? You should have at least some trust that you're making the correct purchase. And that's something that we can do with public chains. So property registries, digital identities, there are numerous applications, and they all revolve around public ledgers.
So yeah, I like the identity because it can save people a lot of time when they go to different ministries if it's all in one place. And I think it's like a perfect example of where the blockchain is needed, because you have multiple ministries, for example, and so the blockchain is usually needed when you have multiple consortium of players, even if it's a private blockchain, not for end users, but you have multiple government organizations that access the data, make sure it's correct, and validate it. That's a perfect example. And it's also useful for similarly to cybersecurity, for example, secure communication, public key management. I think it's a very good application to maintain one's public key in a blockchain. That way you ensure that no one tampers with your key, and people can communicate with you securely. through secure email, for example?
I think we're not thinking about mining in the region. The presentation that Hanna did about the towers in Amman, that could be the biggest mining farm in the world if we can just do the solar power. Because I think if we look at mining as a source of revenue in the region because of the availability of sun, that could push things forward differently, because now it could be another source of revenue to governments.
It's really interesting. So one of the remaining points I want to just touch upon before we open it up to Q&A is the hype around blockchain. I mean, there's a lot of hype around blockchain, and I was wondering if you guys sort of have some sort of heuristics or ways of thinking about, you know, these new companies or startups or new technologies that are coming up to sort of discern, you know, what is hype from what's not.
Good question. In general, number of participants and if they trust each other is a good way to think about if you should use a blockchain or not. So yeah, several government ministries with regards to maintaining identity, or several banks trying to compare the same, who share a lot of customers. So if you have two banks and they want to kind of share their data, the way they would do it traditionally before is you have a master and a read-only database, and the other maintains his own master database and he keeps a copy of a read-only. So for two people to coordinate, you need 4 databases. If it's 5 banks, each needs to keep 4 read-only copies and 1 master, and now you have 25. And if it's 100, now you have 10,000 instances. So a good way to gauge it is the participants and if they trust one another or if they're known to one another. And
can we call this like maybe something that fundamentally looks like a network or a peer-to-peer network?
Pretty much. And then the second tool we use, and this is actually our CTO's thoughts, who's brilliant, but if you imagine how the internet stack looks today, it looks internet application database. So you have the internet, you have Facebook running on it, and Facebook has user data, and Twitter the same. And we use that same stack for the internet of value. So if I'm trading stocks and I'm using Robinhood, Robinhood has data. If I'm using E-Trade, E-Trade has its data. MarketWatch, eToro, they each have their data. But when we trade stocks, that data needs to reconcile. So all those databases go to the DTCC, who settles and clears the trades, and it takes them 2 days and a lot of manpower. So if you imagine a better stack for that would be internet data application. And that's what blockchain looks like. Everyone plugs into the Bitcoin blockchain to transact. So that when you think about implementations for blockchains, they should usually be when you think, okay, when is the data integrity and verifiability and reconciliation more important than the actual application? And that's going to be in the middle. I should use a blockchain.
Oh, that makes a lot of sense.
So it depends on your application. I think for cryptocurrencies, it's working really well for permissionless kinds of blockchains. I don't see any other, except maybe also Web 3.0, because now you have the problem of Web 2.0. Very few .coms control the majority of user data, and people now envision that we don't want that because, you know, for privacy problems and so on. So with Web 3.0, users store their own data, and then when they want to publish it, they publish it on a blockchain. So those .coms cannot control what you see and what you don't see, and everything is transparent to everyone. So this is another application. I'm not sure if we will go there, but because the client-server, traditional client-server model is also important. For the private blockchains, I think it's when you have, as Yazan said, you have multiple players. They don't necessarily trust each other, and they all want to edit. They want to push data, append-only data structure, authenticated, and data cannot be changed, just append-only. In that case, it will work for identity management and these kinds of applications.
If we want to look at what's hype and what's not, if we disconnect the digital currencies from the price, I think there's a big lesson to learn from everything that's happening, because I see what the hype has been driven by the price rise and fall. But if we approach things with a beginner mind and being open-minded about what's happening, I think there's plenty of resources and things to learn. If we just look at privacy, for example, what's happening at zero knowledge coins, what's happening in Mimblewimble, for example, and others, the way I look at things that I want to learn. And this way I don't care if the price goes up or down. I really want to learn. If it goes up and I have it, that's fine. If it doesn't, the merit to the technology is fantastic.
Yeah, just to add, zero knowledge is a methodology in which a prover, Peggy, can prove to a verifier, Victor, that she knows the value of X without giving him the value of X. What that means to say is you can prove a statement to someone without giving them data. That is incredibly powerful. Imagine a world in which banks can verify your creditworthiness without you sharing data with them. This is a much different internet to what we have today, where the users have to give up so much control over their personal information to operate online. So there are so many things to get excited about as long as you ignore price.
It's not just price. So yeah, there are these very interesting proposals, the Zcash, which is based on zero knowledge proofs to add anonymity and privacy to Bitcoin, for example. But it's a performance issue. It's even slower than Bitcoin. And one of the problems with Bitcoin is that the transaction is only confirmed after, I think, 10 minutes, 6 blocks, an average of 6 blocks or 10, which takes around 10 minutes. So you want to buy burger or juice, you have to wait 10 minutes until it verifies, and then the merchant will know that he got the money. So with Zcash, with these privacy enhanced, it's even more.
But
Mo.
a credit card transaction confirms next day. So the transaction, once you transact on the blockchain, it propagates immediately. So there are companies who confirm immediately. There's a company, I forgot the name, who could give you the money immediately. But if you look at your statement, if you transact with a credit card, the actual confirmation happens the following business day. So if you transact on Friday, it will confirm on Monday.
I think
For some applications, but for real-time applications where I want to get my burger right now, it will take time.
But I think sorry, but I found this very interesting. The most interesting point that you raised with that statement implies that some of the scalability issues could be addressed simply with intermediaries, rather from a technological perspective.
I agree. I think the difference here, the fundamental difference is with a credit card, you have a source of authority that will sort of figure out any sort of disputes, whereas you don't have that in crypto. I guess, this is sort of like the last question for opening it up. I mean, we had the internet, we had the cloud, blockchain, Ethereum. I was just wondering if you have every one of you has like one sort of application or new tech that they're really excited about going forward now.
For me, it has to be zero knowledge proofs and homomorphic encryption and any privacy preserving protocol.
Gotta explain what's
so homomorphic encryption is the ability to, it's encrypted text that you can still run calculations on. So the text is completely encrypted, but it's still processable. So if you imagine a calculator application, and you're sending it the number 3 and 5, and it's multiplying it for you and sending you back 15. In this world, you would encrypt 3, you would encrypt 5, you would send the encrypted text to the calculator, and it would send you encrypted text back that you decipher and then learn 15. So that was the ability to perform a computation in which the computer doesn't know what it just computed. And that's an incredible world. And it's such a difference from what we have today, where Equifax has a data breach, Facebook has a data breach, so it's something to look forward to.
Even if just Facebook had a breach, in the news, maybe that's off topic, but in the news they were actively storing passwords. So nobody does that in the clear text, right? Yeah. So I don't think those companies, even if they have these capabilities, I don't think it's in their best interest to use homomorphic encryption. Yeah, I wish it would get faster because at this point, homomorphic encryption is very, very incredibly slow. It's not usable. It's theoretically possible. It was just shown a few years ago that it was theoretically possible, but it's still very slow. But I'm looking forward to advances in that as well.
Well,
Money, any form of money. Yeah. But privacy coins is, I think, the most exciting. Anything around zero knowledge or even the Mimblewimble.
that's pretty great. So we're going to open it up for the audience for the Q&A now. Please. We're going to be passing on mics.
I can speak loudly.
Oh, well.
I get solicited by people developing blockchain technologies. The question is, are there different technologies around, and are some better than others? I'm talking about technology, not application.
That's actually a great question. At their core, a lot of them are quite similar. There are some variations. A lot of people try to pretend that they're a variation when they've just changed a few parameters. And that's what happened when Bitcoin came out. There were a lot of copycats. They changed very few parameters in the algorithm and implemented them as these new things. It's a smaller space than it seems. And the easiest, I think a good comparison that I heard is just like when the car was invented, the barriers to entry were so little that thousands of car makers popped up. And then over a few decades, they iterated down to a few. And I think we'll see the same thing with blockchain, because the underlying technologies are the same. It's still cryptography, privacy-preserving algorithms, but it's the same pool. And the math behind this pool of technologies has been around since the 80s. And it's only computing power that has evolved to address them. So I think the technologies are few.
I think most of them are open source. So you have Bitcoin, for example, is open source. Monero and all of these, Zcash, all of that is open source. It's in the best interest of the developers to make it open source to show it's secure. And then you have the industry. IBM, for example, Hyperledger is the most well known, and they have this. It's like an umbrella for a project, and it's also of multiple blockchains with different variations that depends on the needs of the customer, and it's also open source. So you can get the code and modify it according to your needs.
I think there are mainly two main areas. Group are trying to make the new money, and others are trying to make the world computer. And the world computer, they have different approach to that. But the world computer one is not proved yet. It's still very, very early stage. I don't think even the leaders, Ethereum, can claim that it's working the way it's intended to be. But if you really want to look at it from distance, these are the main two groups, money and the world computer.
Great. Any other questions?
Thank you all. This is very insightful. So what would you guys recommend to have mass adoption, not just from the consumer side, but the development side in the Middle East of crypto and blockchain technologies?
It's mainly awareness. So we sit in a lot of rooms with bankers, regulators, and governments, and they want to implement certain things that completely don't make sense from a technological perspective. And whereas we sit and we brainstorm ideas with our developers, and they want to implement things that don't make any sense from an economic perspective or understanding of how the world works. So bridging that gap is critical, and it's not just critical for adoption. The technology is still nascent, so it's critical for the evolution of the technology itself, figuring out where it fits. Because as my co-panelists pointed out, the only provable use case right now is digital cash.
Yeah, unless anyone wants to add anything.
From my point of view, I'm not paying anyone in the region other than digital currency. I would encourage that. If you're working with anyone in the region, to pay them with digital currency. They might hate it at first, but that's the only way I'm doing it.
This has been also very insightful. Thank you. You guys seem to really know about this topic. As a Syrian, I wanted to always, I wondered if blockchain can be used to better manage the refugee situation, identity management, and property management. A lot of the immigrants had property, and because of the destruction in certain zones, some people are afraid that they will not find their properties back. And if there's anybody working in that realm that you know.
I think MIT has an initiative. The name escapes me. But do you guys happen? So they're basically preserving Syria's heritage through blockchain. I can get Hassan to send you the link about what they're doing. But yeah, I'll let the panelists take over.
I think the application is very interesting and it's spot on. Land ownership would definitely, using a blockchain, it can save people a lot of confusion and lost rights and so on.
The refugee camps in Jordan use the Ethereum blockchain.
Yeah. So this company called IrisGuard uses devices that they manufacture that rely on iris scans to verify people, and they also use the Ethereum blockchain for verification as well as settlement properties.
Any other questions from the audience? Looks like that's it. Basically right on time. Thanks everyone for attending. This was great. Thanks for the panelists. See you at the next talk.